The following is a presentation of TFNN. Live at TFNN. Breakout Investing. With your host, Ken Shreve.
Hey folks, good afternoon. Ken Shreve with you. Welcome to another edition of Breakout Investing on TFNN. I can't believe it's been a full week since I've been with you. Last time I was on the air at TFNN was Thursday, June 14th. Been busy in the Shreve household. My graduation's going on. My daughter culminated from 5th grade. My son is, out of 8th grade going into high school. So earlier this week on Tuesday, I had some school stuff to attend to, but great to be with you back on the air. And again, the show is called Breakout Investing every Tuesday and Thursday on TFNN from 3 to 4 Eastern. If you want to give me a call, the number to use is 877-927-6648. You can get my show as a podcast on iTunes if you can't listen live, so be sure to check out iTunes. And don't forget, you can listen to all TFNN programming on your smartphone. All you have to do is type in tfnn.mobi in your smartphone browser. Very easy. That'll come up, and just click Listen Live, and you can listen to the stream that way as well. We'll be going over charts on the program today, and if you want to look at those charts live right along with me, do it with Tiger TV. That's right on the homepage of TFNN.com. You can watch Tiger TV also on your smartphone. But if you're at your PC listening to the stream, you can tune into Channel 1. The show is carried live there and archived on Channel 13. So you can listen to the show and also look at charts as well. Folks, don't forget about the Tiger Dollars promotion currently going on at TFNN.com. Purchase any amount of Tiger Dollars by Sunday, June 24th, and you'll get 20 to 30% match on whatever amount you purchase. You can use Tiger Dollars to spend at TFNN.com on any of the newsletters, premium services offered by the website. The difference this time around, Tiger Dollars are very popular. But if you purchase Tiger Dollars by Sunday, June 24th, you're also going to get free admission to 7 online courses. I'm going to be doing one on July 18th entitled Finding New Market Leaders. That's July 18th, and then several other TFNN personalities will also be doing 7 online courses. So if you want free access to these 7 online courses, purchase Tiger Dollars by Sunday, June 24th. More details right on the homepage of TFNN.com. Okay, this market. What is going on with this market? NASDAQ composite. Let's refresh the NASDAQ and see where we're at here with about 50 minutes left to go in Thursday's session. Composite really taking a beating today, down close to 60 points, 2% to 2870 for the NASDAQ composite. It was a pretty constructive performance for the market yesterday. I thought the Fed statement came out. It was kind of back and forth, volatile action. What else is new? But the Fed statement came out. They're extending Operation Twist until the end of this year. No big surprise there. Stocks initially fell on the news. They rallied back to break even turned higher. Then they sold off again, and then they rallied into the close. So it was actually a pretty favorable close for the NASDAQ yesterday. You can see it barely budged from where it closed Tuesday. But sellers in the market today. It's interesting. At the beginning of the day, or a few hours into the session, there was a big push in volume behind the NASDAQ. Looked like volume was going to come in much higher than what we saw Wednesday. NASDAQ volume on Wednesday was slightly below average at 1.54 billion shares. Right now, you'd think there'd be a heavy volume behind the declines today, but not so much the case. At last check, NASDAQ volume was only tracking about 5 to 10% higher than what we saw Wednesday. Volume on the New York Stock Exchange actually tracking pretty close to what we saw yesterday, which was just under 750 million shares, also below average. So not seeing much volume behind upside gains, not seeing much volume behind the selling today, but still a lot of technical damage being done today. Leadership all of a sudden back in question, and I haven't been on the air since we got that buy signal from the NASDAQ last Friday, and as I wrote to subscribers to my Ultimate Growth Stocks newsletter, it was a lukewarm buy signal at best. And we're going to be talking about that buy signal at the bottom of the hour, just after 3:30 Eastern, with my good friend Keir McDonough from Brigos Capital. We're going to be talking to him about this market. What is the meaning behind today's decline? So be sure to check that out. Keir is going to be joining me about 20 minutes or so. But, the bottom line is that the buy signal from the NASDAQ last week was lukewarm at best. There was some encouraging action. There's no doubt about it. There were some stocks moving on Friday when the NASDAQ rose 1.3% in higher volume. And then there was some decent movement in the market Monday, Tuesday, some decent action in growth stocks, some heavy volume breakouts, and so it was encouraging. But just because I saw that buy signal on Friday didn't mean that I started sending out buy alerts left and right and here and there. I knew it was lukewarm. I know it's still a treacherous market out there, and so I nibbled at a few names, and so not getting too hurt by the big sell-off today. Still have a pretty significant cash position. I feel fairly certain that between now and the end of the year, we are going to see some sort of meaningful rally. I know that's kind of a prediction at this point. Certainly, I'm concerned about the percentage declines in the market today. It has thrown the technical look of the market all out of whack again. So again, I'm in no rush to aggressively put money to work here. Let's take a look at the S&P 500, see where that is at. Pretty stiff selling in that index as well. S&P 500 down close to 2% as well. Call it 26.5 points to 1329. So pretty ugly price action. It feels like unequivocal distribution, and certainly a lot of the breakouts that we've seen recently have run into quite a bit of trouble. Let's take a look at Under Armour. This was a stock that really looked like it had nice potential. Stock's getting thumped today, down 6% to 98.89. The initial swing point for Under Armour was 102.86. That was its high set back here in April. It was a decent breakout, a bit lackluster though. Never really got going, but stock got a downgrade from buy to hold. The brokerage that downgraded this stock escapes my memory right now, but I know it did get a downgrade today, sitting just above its 50-day moving average here. Again, stock down about 6% to 98.89. So that's a look at Under Armour. Some of these medical software names. Let's take a look at Athena Health. Apparently the Supreme Court is going to be ruling soon on Obamacare. I thought some of these software names would be beneficiaries of healthcare reform. So they've been under a lot of selling pressure. That's what I know right now. Take a look at Athena Health here, down 1.5% today to 78.94. Its recent breakout here certainly called into question, even though the stock is still holding above its 50-day moving average, just over 75. And another software name, Cerner, really getting hit hard. I had really nice gains in Cerner, gave some of them back, had to sell the stock today. I never like to see signs of institutional selling. I love the 20% growth at Cerner. I think the company's well positioned for growth, but when you see price action this ugly, that's one of the main rules I follow when I manage a model portfolio, when I put buy alerts and sell alerts out there. If I own a stock that starts not to act right, I don't like to sit around and hope that it goes back up. I mean, the price action in Cerner has been decidedly bearish over the past couple of days. Really looked like it had potential here. You can see the nice strong breakout, good volume behind the breakout. Big fall for the stock yesterday, selling equally heavy in Cerner today, down 4.2% to $80.03. The initial swing point for Cerner was 84, and it's not uncommon for stocks when they break out to pay a visit back to their initial swing point. That often happens. It's when a stock breaks out, you like to see it break out, hold its gains, act strong. I think when new institutional money is coming in from the sidelines, there's a better chance of that happening. But when the Nasdaq gave that lukewarm buy signal last Friday, it wasn't really clear to me that new money was coming in from the sidelines. I was a bit cautious, a bit skeptical about the viability of the follow-through. But still, it's not uncommon for stocks to come back to their buy point. When they do it in light volume, that's one thing. That's more constructive. But when they do it in heavy volume, that's more of a concern. And Cerner has come back to its buy point around 84 and then some. Getting hit hard again today, down 4.2% or so. So. Let's check in on the U.S. dollar here. Check in on UUP. This is the PowerShares Deutsche Bank U.S. Dollar Index Bullish Fund. You can see this is really a technical move in the dollar today. A nice bounce off the 50-day moving average here. And the UUP is up 1% today to 22.68. At last check, the U.S. dollar index was trading around 82.27, up a similar amount, a little less than 1%, again to 82.27. It's also finding support at its 50-day moving average as well. Let's check in on the GLD. Gold really got hit hard today amid the strong dollar. Gold for August delivery fell $50.30 to end at $15.65.50 an ounce. This is a look at the GLD. See, it's getting thumped pretty hard here, down 2.5% to 152.02. So really does not look like gold is going to try to move meaningfully higher from here. If the dollar starts to materially weaken, of course, that would help gold. But you can see a big gap up for gold in this area. Tried to reclaim its 50-day moving average here, had problems, more heavy volume selling in the fund today. So gold looks like it's still in trouble here. Let's take a look at the SLV, iShares Silver Trust, which also tracks the price of silver. It's also getting hit hard today, down 4.1% to 26.15. Silver also lower today. July silver dropped 5.5% to 26.84 an ounce. Crude oil down 4% to 78.20 a barrel. The destruction in the price of a barrel of oil has just been a sight to behold in recent weeks. This is really just about a worldwide slowdown, concerns about slowing growth in Europe, concerns about slowing growth in the U.S., impacting demand. So here's a look at the USO, United States Oil Fund, just obliterated since February, March. That's when it started its downtrend, and then the selling really started to pick up. The sell in May, go away when the major averages started to decline sharply in May. That's when oil really started to fall apart as well. USO under additional pressure today, down 3.2% to 29.51. Another problem for the market today. Analyst at Goldman Sachs recommended that clients set up short positions in the S&P 500. They set a price target for the S&P 500 about 1285. It's about 3.5% to 4% below where it currently is. All right, folks, headed into the first break. One more segment after this, then Keir McDonough comes up. You're listening to Breakout Investing on TFNN.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gained access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
You
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage of TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. Nice to be back in the saddle again after being off the air for about a week or so. I took the show off this past Tuesday. But nice to be back with you. Not a great day for the market, unfortunately. It certainly calls the uptrend into question here. I mentioned early in the show that you'd think that volume would be pretty heavy today on the New York Stock Exchange and NASDAQ, but that really isn't the case. Right now it looks like NASDAQ volume tracking about 5 to 10% higher than what we saw on Wednesday. Again, on Wednesday, NASDAQ turnover slightly below average at 1.54 billion shares, and on the New York Stock Exchange, tracking pretty close to what we saw yesterday, just under 750 million shares yesterday. So not overwhelming volume behind the selling today, but still the percentage gains pretty ugly out there, and stocks that were really showing leadership potential under a lot of pressure. So, and the selling seems to be getting worse as we head into the close here. Dow right now down 1.7% to 12,602. NASDAQ underperforming, down 2.25% now, 66 points to 2864, and the S&P 500 down 2% to 1328. No reason to be buying stocks anymore. Yesterday there was a lot of suspicious action in growth stocks. Some breakouts that look good on Friday Sunday, Monday, Tuesday, not looking so good anymore. Let's check in on shares of Equinix here. Equinix operates data centers, and companies basically lease space from Equinix to house computer servers, but shares of Equinix right now down 2.8% to 167.12. You can see on Friday, on this day right here, looking in Tiger TV, Equinix broke out in pretty decent volume. This was the follow-through day for the NASDAQ, and I said, you know what, this one's worth a shot. Where the NASDAQ has a follow-through day, and so I'm going to buy a stock that looks strong here. Looks like it has leadership potential. So I bought when it broke out over the 172 price level here. Very next day, the breakout stalled, and then some heavy volume selling came in the very next day. I knew that was not normal action after a breakout. And when you buy strong performing stocks with top fundamentals like Equinix that are showing price strength, you have to understand that they're not going to work all the time. So I knew that 2 days after the breakout, this stock was not showing healthy price action, so I decided to get out of the stock that day. I don't like to excessively trade my Ultimate Growth Stocks model portfolio, but we're still in a volatile market, and if a stock tells you to sell, if the market tells you to sell, you have to sell no matter how long you've owned the stock. I knew the price action was not normal, and Equinix is now, trading well below where I sold it at. So I got out with a tiny loss, maybe 2%, 3% or something like that. So I never have a problem cutting losses. I know that small losses can easily be overcome if you let a small loss get bigger. A 2-3% loss turn into 8 to 10%, and then that turns into 20%, and so on, and then you just get frozen, and that's how you can really lose a lot of money in the stock market. A lot of people have problems cutting losses short. I do not have that problem at all. So Equinix was a stock I tried. It did not work. I moved on. Simple as that. So a couple of other story stocks today. Let's take a look at shares of Celgene. Remember, there was a time when Celgene really could do no wrong. Highly profitable biotech, really at one point regarded as the Cadillac in the biotech industry. Shares of Celgene today down 11.3% to 59.57, and I see a big gap down for the stock. This is a news-related decline here. The company withdrew its application in Europe for a new indication for its drug Revlimid, which treats a type of blood cancer called multiple myeloma. Revlimid is Celgene's biggest revenue driver. The company did say it plans to resubmit an application with more data down the line for approval in Europe. But not good news for Celgene today. Stock is suffering as a result. More news in the multiple myeloma drug area. Let's take a look at shares of Onyx. Really a sole bright spot in the market today. Shares of Onyx up close to just over 43%, I should say, $19.34 to $63.92. An FDA panel approved Onyx's Kyprolis drug for patients with multiple myeloma who have received at least 2 prior lines of therapy. So good news for Onyx longs today. Coming up next, joined by portfolio manager Keir McDonough from Brigos Capital. We'll do that when we come back. You're listening to Breakout Investing on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. A couple pieces of economic data earlier today that the market wasn't too happy about. We saw the China Flash Purchasing Managers Index. It fell to 52.9 from 54 in May. The June reading was the lowest since last July, although it did stay above that key 50 level, which indicates expansion, but slowing growth. Certainly an issue for China and the rest of the world. Probably the most disappointing piece of data was a weak reading from the Philly Fed. The Philly Fed's business outlook contracted for a second consecutive month. It fell to a reading of minus 16.6. Estimates were for a flat reading to minus 3.5. So very, very weak reading from the Philly Fed. Weekly jobless claims came in at 387,000. The estimate was for a decline to 380,000. The prior week's claims were revised higher to 389 from 386. So that the big problem for the market was that second straight contraction in the Philly Fed. A lot of headwinds out there for the market. Now we'll check in on the major averages with about a little less than 25 minutes left to go in Thursday's session, and we're bleeding pretty badly here. Nasdaq down 70 points, now 2.4% to 2860. The S&P 500 next down 2.1% to 1327, and the Dow down 1.8% to 12,588. As promised, I want to bring on my good friend, former colleague, Keir McDonough from Brigos Capital Management. Keir sets up shop in Boston, Massachusetts, where I suspect it's pretty warm out there today. I hear this New England weather and going through quite a hot spell. Keir, I wish I could have you on during a better day for the market. We've been talking recently, seeing some interesting setups out there, some growth names acting well. It seems to kind of run into a pretty big roadblock today. How you doing, Keir?
I'm doing well, Kenny. Nice to be on your show again.
So what do you think? Expected action, unexpected action. Why don't we start with the buy signal that we got last week? We had
sure. Last week we had a correction. Nasdaq had pulled back about 10.5%, and the S&P had pulled back about a similar amount. Last week we did see a change in trend in the market that it looked like a new confirmed uptrend had begun. And we had seen some leading stocks that were breaking out and acting quite well. They were as hot last week as the weather is here in Boston. It's 95 right now in Boston here. So earlier in the week, the market was a lot hotter. Today, not so much.
Yeah, for sure. Well, stay cool. But when the Nasdaq followed through last week on Friday, I mean, a lot of other growth guys I talked to, that 1.3% gain. I mean, we knew it was on the light side, but then again, you really didn't want to. You never want to argue with the market. If you get a buy signal as lukewarm as it was, you have to kind of look and see what else is happening out there. And earlier in the show, I mentioned there was some good volume in Equinix, EQIX on that day. It broke out over a swing point, but then as I noted, over the next couple of days, it really started to show kind of wishy-washy price action, so it really wasn't acting right. But so we're down 2.4% on the Nasdaq right now. Is this thing just dead in the water, or is it still too early to give up on this uptrend?
Well, historically, if you look back, when you get a new uptrend starting, and I think you know this very well, and you get a professional selling day like today, heavy volume and a big down day on the tape, generally, if you get one of those in the first 3, 4, 5 days after a new uptrend begins, the probability of that uptrend working is not very good.
Yeah, I mean, there's no question about it. I mean, even some of these stocks that were hanging in there pretty well. Technical damage done today. I mean, I think the goal or lesson right now for growth investors is don't be a hero. Don't rush into anything here trying to catch things on sale. We got to see let the selling play itself out and see where we're at. Would you agree with that?
I agree completely. I mean, there weren't a lot of stocks that were even prior to today. We saw some breakouts, but we didn't see enough breakouts that were holding up. I think a couple of good examples today of failure breakouts: Under Armour, which is down about 6% on the day today, and Cerner, the healthcare IT company, broke out earlier in the week on very good volume and gave it all back plus some over the last couple of days. So you couple that with a market that's heading south, and what I interpret as some of the better merchandise out there not being able to make any progress at all, that's a good market to probably sit on your hands.
No question about it. And I know we talked recently. When a stock does break out and it breaks out over a swing point or a pivot in heavy volume, it's not uncommon for it. I mean, you'd like to see breakouts hold. You'd like to see them hold above that pivot point. You'd like to see it move sideways, maybe present another add-on buy point. But some will come back to the buy point. But there's such a thing as coming back to the buy point in healthy fashion, and there's such a thing as coming back to a buy point in unhealthy fashion. Is that an accurate statement?
I agree completely. It depends how you get there. If you get there on some light volume after a breakout and you pull back, because roughly about 40 or 50% of the stocks will pull back slightly towards their breakout or inflection point after breaking out. But if they do it on heavy volume and kind of pierce through there, you have to question how valid is this new uptrend?
Right. So, Kerry, you got to be looking at some stocks that you think still have a chance here. Any names out there that are holding up better than others today? Any growth names that you're particularly looking at that you think have, when new money does come in from the sidelines? That was another thing about the Nasdaq's follow-through day last Friday. 1.3% gain. Yeah, volume did come in higher, but during the summer times, is it really reasonable to think that new money is going to be coming in from the sidelines in spade? Is there a better chance, for example, of that happening, in August, September, October, later in the year? But, all that said, are there names out there that still have your interest? What stocks still have potential between now?
Doesn't mean I'm doing much with them today, but I'm watching them and doing research on them. My approach is to look for, just like you, look for leading stocks in the top sectors. And a couple of industries that I like right now, or a couple of sectors that I like, are U.S.-based companies that really don't have any European exposure or even foreign exposure for that matter. And a couple of companies that I like are two recent new issues, Dunkin' Donuts and symbol DNKN, and the Fresh Market, symbol TFM. Both are companies that are expanding their footprints through new store openings, and both still have years of expansion in front of them before their markets are saturated. So those are two companies I like that are young or growing, and they've got a big playing field in front of them.
Nice breakout for Dunkin' Brands recently. Stock right now trading down $1.34, about 3.6% to $35.23. Still holding well above its last pivot. And let's check in on the Fresh Market here. That's ticker TFM. A lot of people like to talk about Whole Foods in the natural organic food space, but Fresh Market, a newer company, came public not that long ago, sitting right at its 50-day moving average here. Shares of Fresh Market down 2.7% to 51.79. Kieran, in your notes, you also mentioned a couple of internet IPOs, LinkedIn and Facebook. I want to get your take on Facebook. Obviously, it was not a successful IPO. It's still a little unclear to the street where the company is going to, be able to achieve consistent bottom line and top line growth going forward. What's your thought on Facebook? Does this stock? Do you still see potential here? Obviously, it's still in the early stages of building a base, but are you overall bullish or bearish on this company?
Sure. I'm always looking for new industries and companies that are changing the way we work or live. I think Facebook fits that. They have 900 million users. It's a big base for driving sales and earnings per share. The chart actually reminds me of eBay. Going back to 1996 when they came public, the stock had about a 50% correction after its IPO. And again, that was game-changing back then. I think Facebook and LinkedIn, which is probably the best way to look at that, is Facebook with a jacket and tie, if you will. They're both changing they're changing their marketplaces, and they're dynamic leaders, and they're worth watching for when the market finally gets some legs underneath it.
Impressive action in Facebook recently. The stock hit an intraday low of 25.50 on June 6th. It has been in rally mode ever since then. It is outperforming nicely today, up 25 cents, 0.8% to 31.85. And LinkedIn, of course, still building a base here. Shares of LinkedIn down 2.8% to 102.28. Reclaimed its 50-day moving average over the past few trading sessions. Now back below the line, just a base building stock here that it could attempt to break out down the line, but not ready yet, I guess, right?
That's how I would interpret it.
Yeah. All right. Well, Kier, always great to have you on the program. Why don't we just leave with this? If you what does a growth investor do right now? What do you do right now? You got a bearish day in the market. What's the game plan going forward over the next few weeks?
I think you continue to build your watch list. Make sure you have the research done on what are the best looking companies out there with the best fundamentals. And what you're trying to do is invest with the market. You want to have the wind at your back. So you want to have the market in an uptrend if you want to put on long positions. And right now the market's under, I would call it pretty strong pressure today. So I would probably try to keep a lot of my powder dry until the probability of a rally getting some further legs to the upside develops.
I think it's probably one of the most common pitfalls of investors is this kind of to feel like you have to have action all the time. You know, like you always have to be invested in something. And I think that's something we both learned very early on in our careers, that it's okay not to do anything sometimes. And if you try to force the issue, that's typically when money, the probability of losing money increases greatly.
Sure does.
Yeah. Well, Keir, always appreciate you coming on the program. Brigos Capital, B-R-I-G-O-S, BrigosCapital.com is where you can get more information about Keir and what he does as a portfolio manager. And Keir, always appreciate the time, and we'll do it again down the line.
Thanks, Ken. Great being with you.
All right. Take care. All right. Keir McDonough, I used to teach workshops, IBD workshops with Keir McDonough. We used to travel around, and he and I used to tag team these level 2 workshops for IBD. So he does follow a similar investing strategy that I do with my Ultimate Growth Stocks model portfolio. And I'm in a fairly significant cash position right now. I nibbled at a few names when we got that buy signal from the Nasdaq last week, but I knew I was in no position to be overly aggressive. It's not like you get a buy signal and you just say, okay, I'm moving all in here, and I'm going to send out 7 or 8 new buy recommendations. You got to dip your toe in the water, see how things work, and that Equinix was again just a great example. I knew it was not showing proper price action after a breakout. You have to, if you're investing in growth stocks, especially growth stocks that are fast growing, that are strong price performers, you have to know how to handle them. And if the market is giving you a pretty clear signal that the breakout has a pretty good chance of not working, there's no sense in watching a small loss get bigger. It's very, very simple. You can take a series of small losses and then be right one time and still have overall net gains to show for it. So keeping losses small, very, very important, and maximizing profits during uptrends is also important. So I'm holding on to 3 small long positions at this time that are still profitable. And I'm going to be watching them closely in coming days, and I may decide if selling pressure continues to build in this market. I may decide just to move to cash and just wait for a new buy signal, have my watch list ready, and then start putting money to work when I believe the trend of the market has changed for the better again. So having a set of rules definitely helps you navigate tough markets. It keeps the emotion out of it, and I feel like I've got a good strict set of rules that protects me during days like today and helps me maximize profits during uptrends and during times when new money is coming in from the sidelines. Let's take a look at some interesting names out there. Stocks, Keir mentioned keeping a good watch list. I still like the business at TransDigm Group, TDG, on the New York Stock Exchange. Technically still holding above its 50-day moving average here. Shares of TransDigm down 1.4% today to 128.03. Company makes engineered components for military commercial aircraft. Still think this one has potential. Risky environment for new buys at this time, but TransDigm Group acting pretty well. We'll come back and take a look at some other growth names that I'm not ready to quite give up on yet. We'll do that when we come back. You're listening to Breakout Investing on TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allowed traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gained access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. Well, unfortunately, the dip buyers are not around today. They were yesterday when the Fed came out with their policy statement, had a nice close, finished near recession highs, but right now the Dow, just a really erratic, bearish day of trading for the Dow, down 255 points, 2% to 12,568. Hits an intraday high of 12,857, a low of 12,568. So almost a 300-point intraday range for the Dow. Let's check in on the NASDAQ composite ugliness here as well. It is down 2.4% to 2859. You have an intraday trading range, it looks like, of, let's see here, maybe 70, 80 points for the NASDAQ Composite, and for the S&P 500, another bearish day as well taking shape here. It is down 2.2% to 1326. So my game plan has completely changed here as a result of today's bearish price action. We had a lukewarm buy signal from the NASDAQ last Friday. I took that as a sign to cautiously put on some small positions in the Ultimate Growth Stocks model portfolio. I've taken some profits recently, kept losses very, very small in other cases, but still feel pretty good with the way I've navigated things recently. Did not expose people to unnecessary risk. We're still sitting in a fairly significant cash position, and that's an important point. When I was talking with Kier in the last segment, one of the most common pitfalls an investor can make is to feel like you have to have action all the time. You don't. When the market is in a downtrend and when institutional investors are selling stock, that is a environment where the chances are pretty good you're going to lose money in stocks. This is, despite today's bearish price action, this is still a market that I still don't think I can get short with conviction here. With whether it's with an index short fund like the ProShares short Russell 2000, RWM, or the S&P 500 short, which is SH. In fact, let's just take a look at RWM here. This is the ProShares short Russell 2000. See, it is up 2.5% today to 2780. This is just a bounce off a bottom here. It does just one day of strength does not tell me that this ETF is ready to start a new uptrend. Same with SH. Let's take a look at the ProShares short S&P 500. Big move here too, up 2.3% to 3751. But after an extended period of selling here, one day of big gains does not necessarily make a new trend. So I don't think this is a market that you can just run out and get short. Let's just see how things play out in coming days. Above all else, keep a watch list of stocks that are holding up well. Amazon is still a name I'm watching here. We'll look at the daily chart first. Shares of Amazon down 1% today, so falling a lot less than the NASDAQ. Shares recently trading around 220.79. Let's take a look at a weekly chart for Amazon, and you'll see a pretty decent technical structure here. Okay, so you can't just throw your arms up and say, well, a breakout's never going to happen in this name. We're in a fast-moving market these days. Things can change quickly. You have to keep track of stocks that are holding up pretty good. So looking at Amazon here, starts the base over here, forming a cup with handle pattern, swing point of 233.84, firming up at its 10-week moving average. Its technical picture is still pretty good here. So Amazon not looking too bad. All right, folks, coming up next, the Tom O'Brien Show on TFNN, 4 to 6 Eastern. Thanks for listening. Have a great afternoon. We'll talk to you next week.
Great Basin Gold is a mining company engaged in the